Extremely important to pay attention to Bitcoin if you're new to crypto in general, or even as an XRP holder. At the end of the day, Bitcoin is the mothership, and it's really what's driving this whole deal. In other words, if Bitcoin goes up, typically it creates for a positive market environment for other cryptos to go up, like XRP. XRP isn't the only good crypto in the space, however, it is one of the best. Still, its market cap is relatively small compared to that of Bitcoin, especially when we look at market caps and what drives the markets. As you can see, the majority of the market is Bitcoin, sitting at $1.66 trillion. Then our next closest bet is Ethereum at $268 billion, which is far smaller than Bitcoin. And then number 4 now is $124 billion XRP versus Tether sitting at 142. In other words, on this dump and crash, people were selling a lot of their cryptos and then buying and holding, or better yet, just holding Tether in order to mitigate some risk. So yes, over the last 7 days, XRP is down quite heavily, and over the last month since the inauguration, it's down almost 38% from its all-time high. And it's not just XRP. I mean, the whole crypto market's really just a bloodbath over the last 7 days, and anything that is up just slightly is likely just making a bounce off of those lows, but generally speaking looks extremely weak. So what's really going on? We're not too sure, but from a macro standpoint, things were already not looking too good. From the Fed keeping interest rates really high, or the fact that we now had a yield curve inversion cross back over into normalized rates, which is typically indicative of a recession. We've been talking about this for quite some time. People say, well, the bull run isn't over. However, the bull run was already lasting from all the way at the start of 2023 through the end of 2024, and nobody says that it has to go another year. Although generally speaking, here are the previous Bitcoin cycles. As you can see, the purple line right here would be your 2012 cycle. This darker green line would be your 2020 cycle. The 2016 cycle obviously performed slightly sooner. However, it performed worse relatively. Then as of right now, according to the data and where we're at in the market cycle, we are actually decoupling. By now, usually the market continues to rally and make for some new all-time highs, or at least pushes for them. Whereas right now you can see this yellow circle is pointing to the fact that we are truly decoupling. And this might just be because we actually are getting what we've asked for, which is institutional investors. And the problem with institutional investors is that they mess around with all sorts of fancy and technical financial products, stuff that they're privy to and have traded really well over the years. Back in the day, this was truly a retailer's market. So when we saw bull markets rally, they rallied hard. But as more institutions have entered the space, it's become harder and harder for us to actually make money, which is why this altcoin season has been by far the worst that we've ever experienced. Even if you're an XRP alone type of a person, in other words, you only buy and hold XRP, it's been a great market for XRP, but for virtually everything else in the market, it has been terrible. And so I'm going to look at this post from Kyle DeChass talking about Bitcoin and why it's crashing and why it's causing everything else in the market to crash. And he's calling it the cash and carry trade that's suppressing Bitcoin's price. And without getting too technical, especially if this is confusing for you, I can see how this is working and why it's so dangerous to be a market participant among many wolves. For months, hedge funds were exploiting a low-risk yield trade using Bitcoin spot ETFs and the CME futures. This is how it worked. They would buy Bitcoin spot ETFs like BlackRock or Fidelity. Then they would short Bitcoin futures on the CME. In other words, they're buying spot product, they're shorting over here. They would farm the spread for 5.68% annualized returns. However, because some of them were using leverage, and I believe many of them are, because these are people who know how to use leverage to juice their returns, they were actually earning closer to double digits. In other words, they really don't care what happens to Bitcoin. They don't care about your financial future. What they care is to earn outsized returns in a product that is volatile, where a lot of people that are less educated investors are playing in the market, and ultimately they want to exit with some profit. However, the trade depended on Bitcoin futures trading at a premium to spot. With the recent market weakness, that premium has collapsed, and the result is the trade is no longer profitable, unsustainable, which is why funds are exiting, and Bitcoin sell pressure has skyrocketed. And again, if Bitcoin sell pressure is going up, so is the sell pressure for the rest of the market, and it's very hard to argue because the data is there. So no matter what anyone says, this is just the reality. We can no longer accept the fact that we have to buy into hopium for the future, or the fact that institutions are here, or the fact that some company has a boatload of utility. At the end of the day, you're seeing it happen right in front of your eyes. Markets can crash with all of the positive news in the world, and that's because typically by the time you hear about news, if it's not already caused the price to pump, it's already priced in, which means you probably shouldn't be buying news. You should be buying the rumor. And we all continue to buy and hold the news. In other words, just look at the brutal ETF outflows. Over $1.9 billion in Bitcoin sold this past week. And by the way, this is also from the major fund managers for their clients. It's not just the funds doing it, but they're probably doing it on behalf of their clients as well. So he asked the question, why is this happening? And he really states the case perfectly. Hedge funds don't actually care about Bitcoin. They care about returns. They don't care about crypto. If they did, they would continue to hold and buy it. However, they've been selling it, which means they've been using their positions to earn. And when the earning is no longer there, they are willing to dump. This is the brutal cold truth and reality of markets. So what exactly happens next? Well, there's going to be a cash and carry trade that will keep unwinding, which means we're likely going to see a little bit of further downside, and Bitcoin needs to find a real organic buyers, not just hedge fund. Volatility will remain high as leveraged positions continue to get liquidated. So let's go ahead and look at those levered positions now. So the first thing I want to do is look at the liquidation map. It actually gives us a pretty good read, and I've noticed it's actually better than most indicators when looking at what's going to happen next with either Bitcoin or XRP. It's important to pay attention to both, because if there's some sort of a negative correlation, in other words, one is trading one way and one's trading the other, something might actually be off. But generally speaking, they're both trading in the same direction, which means if one is bullish, the other's bullish. If one's bearish, the other's bearish. Now, one may outperform the other seriously. However, generally speaking, this remains true. So as you can see, I am on the Bitcoin 1-day time frame. I'll go ahead and get rid of the leverage on all of these exchanges and just focus on these cliffs. As you can see, there is more leverage on the long side. This means long liquidations to the tune of $3.6 billion. So whenever we get a bigger red side versus a bigger green side, this typically means more people are bullish. But it's important to note that this is only on the daily time frame. I'll even go ahead and refresh it just to be safe, and you can see that it's still pretty much the same. So then I'll go ahead and go to a 7-day time frame, and this is where things get really interesting. Typically on the 7-day time frame, this is more of a read for what's actually coming and what direction you can trade in, especially if you're in a swing position or holding. At the end of the day, we still have far more shorts, as you can see here, up to the tune of almost $7 billion versus longs to the tune of $3 billion. We have over twice the amount of shorts, which leads me to believe that the majority of people are positioned short still, and that is not a good sign of what's to come. So let's see if that same thing remains true on something like XRP. And I'll go ahead and remove all of these guys just so you can see that this is cumulative. We have far more shorts to the tune of $217 million versus $122 million on XRP 7-day time frame. So although things might look bullish today, generally speaking, traders are still bearish, and I've seen this play out quite a bit, to the point where I pay more attention to that 7-day period than the 1-day period.